Hello and welcome. Today I have the pleasure to talk to Dan Rykhman. Dan is working on a project called Fungible.Network, and it's a very interesting proposition. I'm very happy to have Dan with us. Dan, thank you so much for joining us.
Hi, okay. Thank you very much for having me.
So first of all, I would like to give you the opportunity to explain the audience in 1 to 2 minutes what Fungible.Network is all about.
Yeah, sure. Fungible is designed to issue asset-backed tokens. My background is financial markets and financial products. And I think every asset in the world can be tokenized and will be tokenized. And when the assets are represented on the blockchain in crypto tokens, the security and transparency of the underlying asset is very important. So Fungible is a platform that has partners as traditional custodians and administrators that provide daily audits of the underlying assets. As a functionality of our platform, we can issue or redeem tokens on demand in real time. So people can come to us and they can buy any token and we would create the token on the fly.
Okay. All right. So just to make sure that we all understand, when you say tokenization, you mean that there is a token issued for a certain asset. Let's say I have any kind of asset, let's say 1 kilogram of gold, and I could have 100 tokens that would represent that 100 kilograms of gold, right? And then I could, instead of selling the gold, I could sell the tokens and buy the tokens.
Correct. And essentially, if you look at markets in general, we were always buying containers or wrappers representing different assets. Before crypto, if you want to buy gold, you could have bought a gold ETF or a gold futures contract. So different wrappers have different attributes. Now buying gold in the crypto format gives you very unique, very interesting attributes. It's mobile, it's fractionable. People anywhere in the world, in theory, can buy the same token for the same price and hold it in their own wallets. So yes, people will be able to buy any assets in this new innovative containers.
All right. So if I understand correctly, as of now, even before cryptocurrency, we already were dealing in some assets. Actually, we're dealing with the containers. So when we were buying or selling gold, we didn't have to give physically the gold, but we were actually giving certificates that would represent that gold. So the question would be, my question would be, what kind of what is the cryptocurrencies, or what is the tokenization now doing to the ownership? What assets do you see in the future being tokenized, and what advantages do you think a tokenization can have?
Yeah. So I think virtually every asset that can be tokenized will be tokenized. And there are a number of different advantages, and it really depends on the asset. If you look at, for instance, a stock, Google stock or Apple stock, why would you buy that asset in crypto? If you live in the United States or in Western Europe, it's very easy to buy any security. It's an easy process. We can open brokerage accounts quickly. It's very easy. But if you live in Russia, if you live in China, if you live in Africa, you have very different investment experience. You have to go through a local broker. Your commissions are much higher. That local broker may go out of business tomorrow. So the ability to buy quality securities, let's say, for people in the developing countries is very limited. Also, if you want to buy, let's say, $10, $50 worth of Amazon stock, which is $1,500 a share right now, you cannot do it because minimum you can buy is one share. But if it's a token, you can buy any fraction of the token as long as somebody is willing to sell it to you. So the assets you buy in crypto format, they're mobile. You can keep it in the wallet on your phone. You can travel anywhere in the world. It's fractionable. The governance process could work differently. The provenance of the trace differently. So there are different attributes that you would get when you buy a tokenized asset versus what already exists in the market.
Okay, all right, I understand. Now, you were talking about shares, and that shares can be tokenized. So how would that work in practice? So I can buy an Amazon share, but I don't have to buy one. I just buy 1/10 of it because I'm buying
So the way it
tokens.
would work on a, yeah, the way it would work
So
on a platform, you want to finish your question? I'm sorry.
yeah, so basically, somebody has to own a share that he's able to sell me. So
Yes.
now I'm buying tokens. So I'm asking which person would tokenize the shares, who has the right to tokenize a certain asset, how would he do that? And then how would the buyer know that in fact by buying tokens, he actually gets part of the ownership?
And that's exactly what the functionality of the Fungible platform is. As a customer, you'll be able to come up to our platform, open an account, deposit some cash, or deposit, let's say, Bitcoin or Ethereum, and then you can choose one of the fungible asset-backed tokens that you would want to buy. So if it is, let's say, Apple token, and you would indicate that you want to buy, let's say, 1/2 of that token, right? The way it works, system would take your money for based on the value or price of 1/2 of the Apple share. And we as a company would put money for another half of that share. And then we would buy one share of Apple in the stock market, put that share with the custodian. And then when the custodian is verifying that the share was delivered, we would generate one token and sell you half of the token, another half of the token in our inventory.
Okay, so basically in the example you gave, you would have to buy the share in order to be able to pass on part of that ownership to
Correct. Correct. So essentially, we have two options, right? We can have an option where we can say that we can only tokenize an even number of shares, and then let the investors on the secondary market sell fractions of the shares to other investments. But we're willing to take that role and sell fractions of the shares to the investors, if you will, as a marketing idea, right? To allow people to buy fractions of the shares or fractions of the tokens from us. And then our risk in that case is really just fraction of that single share, because we're never going to hold more than that.
All right, okay. Now, what kind of assets am I able to buy, and what kind of assets am I able to tokenize on your platform?
So day one, we're starting with liquid assets. We're starting with fiat currencies, fiat currency baskets. We're starting with securities, cryptocurrency baskets, also interesting concept in terms of creating tokens. I'm getting phone calls from family and friends virtually every day asking me what cryptocurrency to buy. And for new investors, it's very difficult for me to tell them buy this one or buy another one. But it's much easier for me. I think it's better option for them to tell them buy top 10 or top 5 cryptocurrencies, right? And we will create tokens that would represent those baskets.
Okay, all right. So just about this example you mentioned, cryptocurrency baskets. So let's say top 10 cryptocurrencies. And so I would like to not have to invest in each of these cryptocurrencies. I would just want to buy one coin or one token that represents those 10. So how does it work? How do I know that those 10 are actually being represented? What I mean is that recently I was talking to another entrepreneur who had a kind of idea where he wanted to do a crypto 10 or crypto 20 cryptocurrency index, and he wanted to have people buy his tokens in an ICO. But he didn't want to invest in any of those cryptocurrencies. He just said, well, the investors give me the money in the ICO, and I will calculate the index, and then I hope that the token would be the same value as the index I calculate, kind of go up and down with the index. But there was no relationship because he didn't buy any of the underlying values. Would you actually buy the underlying values?
That's a very risky approach. So the way our system works, we have the basket trading functionality. So if we're talking about Crypto 10, we have programmed all the percentages that we would have to buy for each of the underlying component, right? So if you come in and based on the prices, we're connected to multiple crypto exchanges right now. So based on the prices we receive from these crypto exchanges, calculate how much money we need to buy each of those components, calculate the value of that basket token in real time, right? So we can show you what the value of that basket is, and you can decide if you want to buy 1 token, 10, or 100. So based on that decision, you enter your order, system takes your money, and system would go and buy all the underlying components. And we have a crypto custodian, which is an independent company that will hold all these underlying components of the basket. We have another company, which is an auditor, which will provide daily audits. Because what we also do on the blockchain, we will record how many tokens are issued and how much of each of the underlying component is being held in custody. So administrator or auditor in this case would be able to see, okay, we have 1 million, let's say, Crypto 10 tokens issued. They know the weightings, the percentages of each of the component that we say that we bought for that token, right? So they can see how much Bitcoin there has to be there, how much Ether, how much Bitcoin Cash, and so on and so forth. And they will be able to verify that, yes, in fact, all those components are in place. And that audit will happen on a daily basis.
So if I understood correctly, you are cooperating with 2 companies. One is a crypto custodian, and the other one is an auditor to ensure that everything goes the way it should. Okay, that makes sense. So if I understand you correctly, some of the functionality you're talking about is in fact already there.
We have a prototype. We have the functionality where we can create these tokens. We have API links to the equities market, FX market, crypto market. So yes, we can create these tokens on the fly and destroy them on the fly. So yeah, we have all the functionality in place.
Okay, all right. So you already mentioned a little bit about your background. Could you explain us more how your background and how you came into this?
Yes. So I spent more than 20 years in the fintech industry on the intersection of finance and technology. And I've built trading platforms. I had my own high frequency trading system. And last 6 or 7 years, I spent designing financial products, designing exchange traded funds. I worked with top companies, the industry. I worked with BlackRock, Guggenheim, Bank of New York, and a couple of others here in New York. And about 2 years ago, I started looking at crypto, trying to figure out how I can get involved, kind of went down that rabbit hole. And I saw a number of asset-backed tokens projects in the marketplace, backed by dollars, backed by gold, backed by real estate. But from the financial product standpoint, this backing, linking between the token and the underlying asset really was very questionable. Custody was never defined properly. Nobody was doing audits of the underlying assets. And also, I think having the creation and redemption functionality is very important because that creation and redemption create a parity between the price of the underlying asset and the token itself, right? Because if you cannot, and that's what fungibility is, that's what Fungible is all about. If you can take that token, sell it to us at any given time and get back the value of the asset, and vice versa, if you take the money that you have and buy the token from us, and again, where the value of the token equal to the value of the underlying asset, that creates one-to-one parity. And that's what we're after.
Okay. So in the market right now, are there many people trying to do what you're doing, or do you see Fungible as one of the pioneers? Or maybe both?
Well, a little bit of both, right? I see 3 different categories of companies that are looking at asset-backed tokens. First category, I would call them single asset projects, people that are creating a token linked to, let's say, gold or solar energy or dollars. To me, they're more of potential customers and not the competition, because Fungible is up and running, we will try to kind of convert them, because all the components that we have, in theory, any good projects would have to have, which is custody and audit, right? And the real-time creation and redemption as well. So another group of companies that are in this market, I would call them financial supermarkets, like Bankera, BankX, this type of companies that creating really kind of financial banking services on crypto. And they do try to create products that represent real assets to sell to their customers. But in reality, it creates a huge conflict of interest when they try to sell their own products. So they really need independently designed and developed products to maintain the objectivity with their own customers. So the real competitors in this market are companies that are creating platforms that allow tokenization. There are a number of companies that do tokenization, but they do it more from the ICO standpoint, where it's more or less a singular event. We create tokens representing a business or representing asset, and from that point on, these tokens trade in the open market, right? And in that case, it's difficult then to maintain parity between the price of the asset and price of the token. If you look at the financial markets, so the closed-end funds have been around for a very long time. I don't know if you're familiar with the closed-end funds. Essentially, just like an ICO, there would be an IPO, they collect some money, and then they buy the underlying assets based on the closed-end fund manifesto, or based on how they kind of describe their investment strategy, right? And very often, these closed-end funds, they trade below net asset value, and sometimes they trade above net asset value, but very rarely they trade at net asset value, because there is no one-to-one fungibility between the underlying asset and the shares of the closed-end fund, right? Then the evolution went to the mutual funds, which are basically just like closed-end funds, but there's a creation and redemption on a daily basis, but you can only do it, you have to email, or you have to mail your check to the mutual fund company, they issue new shares at the end of the day, send you back the statement, very clunky process. And next evolution in that type of process was ETF, where ETFs is created, and then shares can be created and redeemed every day, and then you can trade the shares on the secondary market. And this trading of the shares on the secondary market create the arbitrage opportunity, because like S&P 500 is an example. If you can buy S&P 500 ETF for the price below the value of the underlying 500 stocks, you would buy that ETF, redeem it, get the value for all 500 stocks back, and make the money on discrepancy, right? And I think creating tokens representing financial products, representing assets, it's just evolution of these financial markets. Because ETF market is limited to any particular geographic area. If there is a good, let's say, ETF in China or Russia or somewhere in Europe, for instance, for me as a US investor, I wouldn't know about it, and it's very difficult for me to buy them, right? So when you have this type of products in crypto, the whole world becomes one big financial supermarket where all these products can be created, trade, and available to all the investors.
So do you think that in 10 years from now, tokenization of assets would have been commonplace, and that would be your platform, other platforms would be able to trade tokens? Okay.
Absolutely. There are about $300 trillion in financial products traded on exchanges around the world. In the next 5-10 years, a significant percentage of that number will migrate to crypto. Whether it's 5% or 10% or 20%, we don't know, but I think it will be a significant number.
Okay, so that means there's a market opportunity, and of course there's an opportunity for Fungible. So Dan, you, as I know, you're also in order to finish the product and launch it, you are also looking for investment and maybe doing afterwards your ICO. So tell us about that, and tell us about the opportunity for investors, both in terms of equity investors, startup investors, as well as ICO investors.
Right. So I already mentioned the size of the market and the size of the opportunity. We think in the next 5-10 years, we'll be looking at $15 to $30 trillion asset-backed tokens in the market. Fungible has 3 different revenue sources in our business model. First of all, the primary market that I described, where investors can come and we can create or redeem tokens, will have a transaction fee. Some of the tokens that we issue will have an AUM fee, which is annual assets under management fee, just like ETFs do. And the platform will be open to third-party designers and token issuers to come to us and use the platform to issue their own tokens. And we'll have an issuance fee where we'll charge these independent companies for the right, I guess, to issue tokens on Fungible platform. So those are 3 different revenue sources. Our model calls for about $2.5 million in revenue per $1 billion in AUM. So if there is, let's say, $15 trillion migrating to crypto in financial assets, and we can capture only, let's say, 1 or 2 or 3% of that market, we're talking about $150 to $450 billion in AUM, and you can do the math with the company. So it becomes a very profitable company. In terms of our own token, we're issuing Fungible 1.0, and what we've built so far, the prototype, we've built on Ethereum. And we're doing Fungible 1.0 on Ethereum, because Ethereum is a very good prototyping tool. But Ethereum, as you know, has a lot of different issues and a lot of problems with bandwidth, throughput, things like that, and security for that matter. So what we want to do, an ICO, raise a little bit of capital in the ICO, and then design our own blockchain, and then issue or set up Fungible.Network and have asset-backed tokens issued on top of our own currency that will power that network. The economics for our own currency is also very appealing. We are planning to do a POS version of the blockchain, proof of stake, and people that stake our tokens will receive rewards based on the volume of transactions on a blockchain. Every transaction goes through blockchain. Our blockchain will have a small transaction fee. It will start with 100th or 1%. It will go much farther down based on the size of the transaction. But these fees will amount to about 1% return per year per 1 billion in AUM. So again, if we can get to 50, 100, 150 billion dollars in AUM, that means you can be looking at 100 to 150, 200% return on that token.
All right. Okay. So I see that there is a great opportunity for equity as well as for ICO investors. I can see that there is a huge market opportunity, that your company is one of the pioneers. I can see that you have a lot of experience in the area, and you are cooperating with other companies, the auditors company, the custody companies, to make sure that everything is done the right way. So it seems like a really good opportunity.
I believe so.
Yeah. All right. In fact, I have to tell you, I am asked by several people, but especially by a buying pool that has 15,000 investors in ICOs, to analyze ICOs for them. And they give me the ICOs that they think they are best. And I look at the ICOs, and many times I just don't understand why this ICO be interesting, because I don't really see many times the market opportunity. And many times I think it's a kind of a scam. And the founders, they're just out of high school or out of university, have many times no work experience, or have maybe done an internship, a second internship. Almost no experience in the blockchain. Of course, few people really have along many years of blockchain experience, but no work experience. And they just come up with a white paper, don't even have a prototype, not even have, of course, no final version, no customers. And they want to raise 20 million in an ICO. So I feel that even if you were to do a pre-sale now, and you were to write a white paper, I would be able to pass it on to that group of investors. And I'm pretty sure a lot of investors would be interested and would want to chip in some money for you and for the pre-sale for you, so you can do the ICO.
Yeah, we're actually open to do a private pre-sale right now. We have the white paper that I'll be happy to share with you.
Okay.
Yeah, we're open to either equity or private pre-ICO token sale.
I think, as an investor, I think, I would want to have equity, right? But
Right.
I know these the people from the investment pool, they just so much hyped about ICOs, they just want to invest in ICOs.
Yeah.
So that's why it might actually be easier to not give out equity and just get ICO investors. So yeah,
Right. I mean, the truth is, I'm happy not to give up equity, right? I can sell tokens all day long. But to be honest, I think the best option for both us and the investors to make sure our interests are aligned is some kind of combination, some equity and some tokens for the investors.